Life and Lifestyle here. Another market recap. Market recap for round 22, August the 24th. This is the second trading day of the week. Decided to try a little blues. Decided to try a little blues this time. So you guys know the drill. We're going to go over the watch list, go over what was triggered, what hit, what died, and also takeaways from the market. First thing first, you would like to learn from the people I learned from, because you said the Stock Market Playlist. Follow me on IG and on Twitter. I got to update my Twitter and IG. I've been a little behind lately, but I digress. Today's watch list is one of the biggest watch lists I've had in quite a long time. If you remember from Monday, I didn't really get a chance to make a watch list, but I did make an impromptu one that involved about this many companies, about 6-7 tickers early in the morning. So I just adapted those over to my watch list for today, and that gave me a total of 2, 3, 4, 5, 6, 7, 8, 9, 10, 24 tickers. Huge watch list. I haven't seen a watch list this big in a while. But a majority of these were triggered at the open. So there was really nothing I could do. That's the wrong one. I'm gonna put that in here. A majority of those were triggered at the open, so there wasn't much I can do. Yeah, we'll go over what died. Since it's 24 tickers, I'm not gonna read them all out, but most of them happened anyway. So 2 trades that died today. We have X, which is U.S. Steel. You remember I told you guys, U.S. Steel is a wonderful company to play for the infrastructure bill that Biden's going to be passing. U.S. Steel, along with Caterpillar, CLF, John Deere. These guys are big players when it comes to making money off of infrastructure building, as well as Tesla and ChargePoint and Blink, because that's also the electrical charging stations. That's part of the infrastructure bill. So watching all those companies. So X, technically the call was triggered, but it was a false break and then it died. So we'll see what that does tomorrow. AMAT, Applied Materials, same thing, 140 call, had a breakup. It did pretty good though. I mean, it almost hit the first level, but almost doesn't count. So then that died as well. So not much died. I'm going to rehash these in the triggered and the target section. So what was triggered? TCOM, Trip Communications. If you could see down here, the monthly $30 call was triggered early at 26.60 or 27.07. If you can see from the night before, technically that was triggered the night before. So this one was not too far gone. Triggered the night before, closed right at the first price level, and then ran up from there. AMAT, like I said, the 140 monthly call was triggered at 131.98. Early entry was 131.50. If you would have caught the early, well, no, because it triggered at the open. You can see the night before. Here's the line. Let me extend this to the right, left. Here's the line. So if you would have got in here, maybe you would have did okay. Or if you would have caught it right at the close. Caught it right at the close in anticipation of it popping in the morning, which it did. It popped very well. And then, you know, went down from there. EWZ, 36.50 call, as you can see, was triggered in the pre-market. Had no inclination that it was going to do anything because it closed right here and died. So if you would have got in early, you probably would have been like, man, I would have messed up. But in that morning, my God, did it shoot up. I'll go over the targets it hit. in a minute. Li Auto. Li Auto is one of the Chinese companies, along with NIO and XPEV, which are all Chinese electrical companies like Tesla. They're all competing with Tesla. NIO's number 2, I think XPEV's number 3. No, Lucid's number 3. And then I think it's XPEV and Li are trailing for 4th and 5th place somewhere. Plus you got Lordstown, which is Ride. Those are trucks though. So Li Auto, the $32 call, early entry and monthly entry was at $29.52 and $29.33 respectively. As you can see, those also stand that to the left. A lot of these triggered either the night before, right at close, or in the pre-market. So unless you had a hunch it was going to do something, you would have never caught these anyway. So what I'm doing now is, as I go through these trades in the morning, if they trigger before I get there, I'm just not ever going to look at them. What's the point of watching it if it doesn't do anything? And I also stop tracking trades that I don't take. I'll start doing that this week as well, so that I could give you guys shorter, quicker videos, more so about my thought process about the live trades I'm taking, since I'm no longer practicing as much. XPEV, which is also XPing is the name of the company. Li Auto and XPing is the company. $42 call, early entry was at $39.12, real entry was at $39.95. That one also triggered the night before. I mean, yeah, right at the close of the day before. So half of these triggered the day before at the close, and the rest of them triggered first thing in the morning. So XPEL jumped as well. VST Vistra, $19 call. This is the only one that triggered in the morning that I actually saw. VST triggered right here, $19 call for 20 bucks. But as I watched it, it barely did anything. I mean, I'll tell you the percentages in a minute, but I mean, it did some movement. It hit the price levels. But as for the movement of the option price, it was pathetic. VNK, 105 put, triggered right here at 106.09. Did not hit the price target, but had a good little drop. It fell, what's that, 60 cents? It had a good little drop, so you would have got maybe a good 15-20% off of that. Which is also something new I'm working on, is taking profit along the way, because a lot of times I'm holding out for that price target to hit and it doesn't, and I miss out on 70-80% profit. So what I'll be doing now, I'll be sharing my trade criteria with you guys this weekend once I catch up on all my weekly recaps, because I'm like 3 weeks behind on recaps. Once I finally catch all that up, I'll show you guys my trading criteria. But let me just say this, that going forward, as the percentages climbs, I'm going to make my new stop loss a previous profit level. So if it goes up 20%, my new stop loss is break even, because my old stop loss was 20%. When it hit 40%, my stop loss is 20%. So as long as the stock moves more than 40%, I'm guaranteed a profit. And if it moves more than 20%, I never lose a trade. I just break even. So that'll probably help save my account going forward. Dominion 75 put was triggered at 78.90. That one did pretty good. DR Horton. This was the trade of the day. $99 call, trigger right here at 95.28 for 55 bucks. And you see where it went. It went all the way up to the price level. And beautiful trade. I'll go over that in a minute. X. Did I already do X? I didn't do X already. So yeah, X. $30 call for the monthly was triggered early at 27.85. Secondary trigger 28.04, ran to 28.49. It had a good little movement, but not enough to really get any bread out of it. O, which is a realty company, $70 put was triggered at 71.03. AEP, $85 put was triggered at 89.81. Now this one did a pretty good drop. That was a beautiful drop, and that volatility shot the price up. Another thing I'm learning is if you catch it on its initial drop, sell it. I'm learning that even though you haven't hit your price target yet and there's more room left in the trade, as it begins to reverse and reassess itself for the next drop, you lose a lot of that volatility profit. So you might, like, let's say this right here. Let's say you got in right here for 25 bucks. Down here, it could have been 80 bucks. But then it comes back up to here and comes back close to it. Now it's like 40 bucks. You're like, wait a second, it was just twice the price. What's going on? It's because that volatility has reversed. And now people are like, okay, this is probably as far as it's going to go, so we ain't got to pay that much no more. So take advantage of it when it falls the first time, is what I'm learning now. AT&T first time popping up on the watch list. Very good dividend company. This company literally does not move any lower than 27 and any higher than 31. You can look over the last like year or two of AT&T's prices. It's been stuck between 31 and 27 forever. It's been stuck between them prices for so long. You can't even buy an option unless it's directly at the strike price. Like, you can't get a $25 put on AT&T. They won't sell it. You can't get a $35 call on AT&T. They won't sell it. I mean, they'll sell it, but it'll be such a low volume of people like, AT&T is never going to 35. What are you, stupid? They got HBO. They got all this other stuff going. They don't go any higher. Highest they've been in like over a year was like 33, I think, 32 maybe. So $27 put was triggered at $27.50. Go figure. And it was a real low volume put. It was a $13 put. Dirt cheap. But AT&T doesn't go anywhere. So you might get $1 or $2 on that. Which you did. I'll cover that in a minute. Corsair gave me one of the tightest spreads I've ever seen. It was like a $1 or $2 spread. Beautiful. I love a tight spread. Because you don't have to worry about your stop loss killing you. You can just let it hit and you'll lose like another $1 or $2. No big deal. Monthly $30 call, early entry, $26.42. I took this one for real. I got in at 20 bucks, and this mug ran. It ran very well. I should have got out a little bit earlier than I did, or I could have held it, but I still did good. I still had a good trade, so I can't be mad about the profit percentages. And Wolf, Petco. Petco is going to be a slow mover. $22 call. Early entry, $21.71. Real entry, $21.82. That was within 11 cents. So as long as you get in around here, you're good. I got in this one as well. $22 call. No, wait, that was an early entry for the 22 call. $22 call I felt was too expensive. So I got into the $25 call for the monthly for 25 bucks. And I'm just going to let it go. I'm just going to hold this all the way up to the broad information top up here, over $1 away. And so far it hasn't really been moving, but it hasn't really been dying either. I probably could have got it for 23 bucks instead of 25, because the spread was 20 to 25. And something you'll learn is that Thinkorswim and a lot of people, especially Robinhood, won't let you cut in between a $5 spread. They'll just say, just pick the higher end or the lower end. So when you want to sell it, you got to sell it for 20. When you want to buy it, you got to buy it for 25. But Thinkorswim allows you to put in $23, and you can get it for 23 as long as you're more than the middle. A good way of telling the price is the mid is the bid and the ask, the direct center between the bid and the ask. So if it's 25 or 20, that means the middle is 22.50. You can't do 50-cent prices, so you could put in 23 bucks and you'll get filled. So if I would have did 23 bucks, I'd probably be up a little bit better, because I'm still at like a 10% loss because it's worth 22.50. But big deal, who really cares? But if I would have got it for 23 bucks, it'd just been 50 cents. So that's a little options learning lesson for you right there. And last but not least, what hit targets? TCOM, that hit in the pre-market, hit for 200%. Went from 30 to 90. Kind of mad I missed that one. EWZ triggered in the pre-market, hit for 75%. It hit to be higher, might have hit 80 plus, because it hit 75%, 60 cents lower than it hit, so it might have hit closer to 100% really. Lee Auto hit for 27% right here and went higher, maybe 50% at the close. XPEL hit for 45% and also ran up higher, definitely probably 50% at the close. So that's 50% on Lee and XPEL, back-to-back 50s on the Chinese stocks. I should have been looking at NEO while this was happening. Matter of fact, let's see what Neo was doing. Huh. This is Neo over here. Neo kind of went the other way. So, yeah, you live and learn. So maybe I shouldn't be watching Neo. DHI hit for 70%. I think around this point. No, it was around here. Hit for 70%. I sold one. I had bought two. Then it hit for like 100, 110, 112% right here. And I should have put my new stop loss at 80%. But I think I put it at 70%. And so it came back down, stopped out here. So I sold both of them for an average profit of like 60%, I think. Beautiful trade. Could have been a little bit better. But I'm still learning. If I would have bought three, I would have sold the second one here and held the third one. Because then you already up. So let's say I bought three for $53. So that's $160, we'll say. I sell one for 90. So now I only got $70 left to make. I sell the second one for 110, so I'm up 200. So I go from 160 to 200. So I'm already up about 20% on my trade, and I still have one more option left. This is the beauty of options, is that once your trade size gets big enough, you really unlock the winning potential of options. Because once you've already made 20% on your trade and you have a third option that's free now, you can just let it go. I mean, this was this a monthly? This is a weekly call. So you can hold that third option until like next Wednesday. And who cares what happens? Let's say you sold it for $10. You still made over 20% on your trade. Let's say you sell it for $50. You made 40% on your trade. You know, that's the beauty of having at least three options. You have to have at least three to truly be able to unlock that kind of power. Because if you had two, you'd have to hold the first one to over 100%. And then you'd only be up like 10% on the trade. But if you have three and you sold the first one at over 100 and the second one at like, 150, who cares what the third one does? But then the third one might hit 700%. You'll never know. So I'm going to watch DH Horton tomorrow to see if I made a mistake. I could have probably held my second one, because I bought two for 106 and I sold one for 90. So I'm already the most I could lose is 10% of the option. So I could have held it, but I was like, let me not be greedy and let me just take the money while it's here. So I sold the second one for 80, and I feel that was a good decision, because my true stop loss would have been down here and I got out here. So I got out 50 cents before it hit anyway. So we'll see what it does tomorrow. Old Realty hit for 12% on the put. AEP hit for 40% on the put. Probably hit for more than that, because I logged that right here. So it might have hit for 60% with the volatility up first. AT&T went from $13 to a whopping $14. 8%. That's it. AT&T does not go anywhere. Corsair, on the other hand, I took this trade for real, took $20. It ran up to 36 right here. I got out here at 27. So I got 37%. Then it ran up here and closed at 40. So I sold it at 27 and went up another $13. Had I had 10 of those, that would have been, I wouldn't have took it like that. I only had one. There's another thing I got to do. When I have a small trade, it's $20. I should probably take at least 3 contracts just to truly unlock the power of options. Because then if you get 3 for 60, I could sell 1 for 30 and then 1 for 40. And now the third one is whatever. I'm already up 10, 15%. So we'll see. And that was what was hit new targets. So all in all, good day trading. Right at 20 minutes. I don't have much more to say. I will give you guys a sneak peek of my watch list, but this episode is late. So technically my watch list is already done. But I'll put it up anyway. So yeah, follow me on Twitter, IG, get you set the stock market playlist, listen to some smooth blues, and I'll see you guys tomorrow.